Well, welcome back to another edition of Commodity Chat, powered by Trader PhD. I'm Dawson Schmidt, the head market content. Join me as always, Ag Market Advisor Nick Lawrence.
Good afternoon.
Well, Nick, officially spring. Some days since it officially had sprung, I guess we could say. Had a little bit of cold here, but going through this week, it kind of seems like things are starting to heat up a little bit, and kind of I've already seen the comments, I think, on social media about farmers being like, "Is it it's time to start planting yet?" I know I know we're way too early for that here in the Midwest, but it's on people's minds.
Yeah, it's definitely on people's minds. And I was driving across Iowa couple last weekend, the kind of that first big hit of warm weather, and obviously it was too wet to do anything. There's still some snow drifts parts of the state, but man, it sure did feel springy, and it wouldn't have surprised me if I would have saw something fertilizer truck, people fixing tiles, something. So yeah, it's about to get going.
Yeah. And with that, I mean, the big focus here that's again taking seed a little bit here for especially next week is of course the acres discussion. We'll talk a little bit about that today, but wanting to kick things off here is that you and I had kind of the idea of just, I mean, focusing on the wheat market. Is it kind of building a little bit of a story here that, can get a little bit more positive, kind of break that downtrend that we've seen forever? It kind of seemed like things were starting to do that here. But yeah, I mean, it just seems like there are some things that could maybe go in the favor of the wheat market. But just before we talk about that, I don't know, is it worth kind of looking at a little bit of a perspective of, just this last season, massive amounts of wheat being produced. A little bit here in the US, not a record, of course, but records set in Canada, records set in Argentina, strong production in Russia and Australia, kind of set us up for a bearish situation, late last year.
Yeah, no, I the whole to put some context on it here, we start looking at just what's going on in all these markets and um what's moving what and what could be sustainable, and I guess what's all war premium, and what could be a little bit more juice behind it. And you start looking at the wheat market, and we had you know, kicked off this marketing year with some pretty fantastic sales pace. It's obviously tapered off a little bit, over the winter. That pace versus the previous year was started to slow down just a little bit. Um, but the overall demand is still strong there. And then you say, okay, well, is there other stuff going on outside of the U.S.? Well, actually, one more thing domestically. Then you look at um, or drought maps and things of that nature. And you say, okay, well, there's definitely could be some issues there, especially through SRW country, um, or HRW country, SRW country, some parts less so, but either way, we could be some production issues there, just coming out of dormancy. Plus, we had the Warner kill issues here across SRW country before that last warm up. And so domestically, with the exports where they're at, and then maybe a possible production hiccup, that's kind of warranted a little bit of this rise. And you say, okay, well, outside of us, what's going on? And boy, I mean, you look at, um, you know, prices have been depressed. The 26 production number is, you know, big. If you look at these global prices, the chart that you made um, for this uh, today, I mean, you do have global prices like starting to round up just a little bit. It's obviously not trending higher, but it looks like it's trying, the market overall is trying to base up. Obviously, you got Argentina, a little bit of an outlier there, but there are evidently, um, there's evidently some sort of demand coming in here and pushing prices up, or at least trying to base up. And they say, okay, but like, why? And for right now, it doesn't look like there's a supply issue yet. Um, but with south of the equator to get ready to get going on their um, winter wheat production, and if there's fertilizer issues and weather issues in Australia, and then we've got some prolonged fertilizer issues and trade flow disruptions, that I could see why the market is a little bit worried here and is gaining a little bit of steam. So I guess with all that being said, I think it'd be a little irresponsible, I think, at this point to completely write off the wheat market as 100% war premium, and as a follower of that. And if you're looking at some of these other things outside of the war, you could definitely see how wheat is supported.
Yeah. Um, yeah, just a couple of charts that you kind of brought up here is that for those watching the video version, what we could see is that, soil moisture for a large portion of the winter wheat areas of the Corn Belt areas have continually seen, expanding drought throughout the winter. We had a couple times where, there was some good storms and some snow that happened in some key areas, but ultimately we have not reversed what we had for problems in the fall heading into winter. Um, we're looking at the potential of a little bit of this, hopefully for winter wheat country, especially in the hard red winter wheat belt. Of course, looking at the potential for some above average precipitation. We interview Eric Snodgrass on a pretty much weekly basis. Didn't last week just because of scheduling wise, but on a weekly basis, he's telling us what he thinks is going on or what could happen, and marrying that up with just the trends that have already observed. And I mean, he brought up this map that I got pulled up here. This is directly from his website. Is that there's a big swath of the U.S. that's expected to get some rain here, I think next week, but there's still a little bit of a hole in some of these winter wheat or HRW wheat areas. And I guess my concern with as we move closer and into the summer is that, these longer range models as well, and this is something that Eric had also brought up, is that, I mean, there's some degree of some drier than average weather or really drier than average weather expected for some of these key winter wheat areas too. So, I mean, it kind of makes you pause and think that, you know, I know winter wheat can be resilient at sometimes, but it just looks like there's some chances where we might not get that replenishment, and then we're still having further ongoing risks of just prolonged drought, even as we enter the summer.
Spit on it and it'll grow, in a lot of areas. And, where wheat is grown, I mean, those are dry areas of the country. Those are arid climates. And that's
Hmm.
why they grow wheat. That's why y'all grow wheat out there. So um it won't take much, I don't think. And with the Bermuda High setting up off the East Coast there, and possibly pumping some moisture up through the Gulf on us. You always get worried when rain is consistently 2 weeks out, 10 to 14 days out. You always
Hmm.
get worried about that they just never come to fruition. And I feel like we've kind of been playing that game just a little bit here this spring. And you eventually, if it becomes a trend, it's going to be a problem. Um, it's no more than a waiting game at this point. I guess that's feeding into what I was trying to highlight earlier, that the market has um, reason to price in some production risk here domestically, is I guess what I'm trying to say. And it's got another week to do it,
Hmm.
until that rain shows up. So, um, and then, yeah, you can see here our, weekly, um, export inspections are, you know, on the higher end of, I guess, what would be average. Um, and so
But you look at where we're at compared to previous years too. I mean, we started off,
most recent years anyway,
yeah, most
especially,
recent years.
yeah,
This chart's only back to 2019 and 20 season. And, we've been trending lower for the past few decades, but I mean, we're looking at a 5, 6 year high here in wheat
right.
export inspections right now to
Yep.
where, it's looking a little bit more positive on that side. And that was because there's some improving global wheat demand in general, but we were able to produce quite a bit of HRW wheat is kind of what's pulling our exports higher this year. I think it's HRW wheat and white wheat are
Mm-hmm.
kind of the main drivers of our total wheat demand for exports this year. And that's been showing up pretty positive in these export inspections report in total commitments.
Yeah. So again, I mean, I feel like for now, I think there's reasons to kind of stay optimistic. I know probably, there's been a fair amount of new crop sales done here ahead of the combines um, up to this point, and I feel like we're going to get we potentially get another opportunity at another good solid sale to get a lot of what we think we can produce mark to the market. If you're in one of those areas that you're worried about production, obviously we got to use some paper positions, but um, volatility's been on our side on getting some of this new crop done, and make sure you talk to me if we've got questions on how to kind of take advantage of that and attack that and make sure that we get take advantage of the volatility. Um, any given moment, all these worries can subside, and we're back to piles of wheat everywhere. So
Yeah, but those worries haven't
not
subsided
yet,
yet.
not yet.
Looking for that potential end in sight with this conflict with Iran. I think the latest news was just this last week, Trump's been trying to maybe bring together some sort of peace deal, and then we got news later today that Iran is rejecting any peace deal that the U.S. is bringing forward. And I think Iran was also saying that the U.S. is not really talking to its officials. A lot of what Trump has been saying of what he's been doing, Iran is alleging that there's just not really that much dialogue. So I mean, hard to say between what the Trump administration says and what Iran wants to say. But I mean, it seems like the Trump administration itself, and you could probably shine a little bit more light on this too, is that Trump administration itself does not want, these high prices that we've been seeing with a lot of key things, especially when it's coming down to what the consumer or what impacts the consumer is feeling.
I don't think, man, I don't think Trump administration, whatever, I don't think they wanted to be in this situation at all. I mean, it's extremely ill timed for um, the agenda that they have, and it's not doing anything to really help them in the midterms. It's not doing anything to help perception. Um, so, I mean, he squarely in a pickle as far as what needed to be done for national security, and then what needs to be done as far as the political battle is concerned. So I do believe it is in his best interest to get this thing put out as fast as possible. Um, if if this if these trade flows of energy and fertilizers and those types of things, if they become a little bit more entrenched and they start to have downstream effects, this could really cause some problems, short, medium, and long term on this inflation fight. Um, and you know, if inflation starts to rear its head again, um, I mean that could be the worst possible thing for midterms. So I think it's in their best interest to try to squash it. Obviously, they know that. They don't need me to tell them that, but so I think they're trying to end this thing. We'll see.
Yeah. The latest news today on Wednesday was, Lee Zeldin, the EPA administrator, did announce those emergency waiver for sales of B-15 in the summer, which, at this point is about every year um, thing that they continue to do. So, I mean, it's not surprising that they came out and did it, but, of course, this time it lines up pretty well with the war going on. Them trying to make sure that, gas stays affordable as it can. So yeah, that's the latest announcement from them.
I mean, I guess that to me, that my biggest worry, that you bring that up, is I've made the case that it's in his best interest to in this and get everything back to trading as normal as possible. The question is, what's like what's plan B if that doesn't happen? Right. You know, like to me, it's plan B to try to, um, in a roundabout way, have price controls on stuff and hold the strings on what things cost. That is not good for a free market, right? What kind of levers do they try to pull to synthetically cap things, move things, that type of stuff? Does the treasury market, there's a little tinfoil hat here, but does it? Well, it's not because they've said
They
it.
said it.
Does the treasury market short crude, right?
Mhm.
Do they, open the floodgates on the SPR again, even though whatever, that's a topic, it's a debate for another. But, you know, export restrictions on certain things, all these things that don't let our markets function how they should. Boy, that's not good in the longer term. I mean, it's a band-aid for his agenda. I would say that's my biggest worry is that this doesn't get squashed. And then he just starts pulling whatever levers that he deems necessary to try to be the czar of whatever.
Yeah, because
And
when they stop pulling those levers, then things could probably get
yeah,
even shakier.
when the market's not trading supply and demand, actual like real supply and demand, and it's trading government intervention, it's just not healthy. So
Hmm.
I would say that's my biggest worry.
Yeah, definitely. Wanting to move on a little bit here, though, to talk about kind of finished up the grain discussion, though, is that, of course, we next week we have that quarterly grain stocks prospective plantings report that the USDA is going to release on Tuesday. We don't have any estimates out yet from the Bloomberg survey, but those I believe are going to be coming in tomorrow. But I mean, it's kind of interesting to note that whatever the USDA comes in with in March, is not necessarily going to be the final that they come in with. That's explained very well with these wide swings. Of course, 2019 being that anomaly with the flooding, but I mean, just last year, just the big swing and miss from March to January, um, coming in with that wide differential or delta in corn and soybean acres, and then they did it again in 2023. I mean, so I guess we're going to get a number on Tuesday, but it's not going to be the end all be all.
Well, I mean, and I don't know if it should be.
Never, because it's just intentions. So I
It's
mean,
a
that's
surveyed,
yep,
pre-printed survey.
yeah.
So like markets change, weather changes, all kinds of things change. So like movement, I think is fine. I don't think they should have to have a peg. Um, yeah, and then, when we release our survey, probably going to see some movement there, and you'll have all that broke down for everybody
Hmm.
at some point here over the next week, and it's going to be interesting to see. And I guess the final point on next Tuesday. Um, you know, I was talking to a producer about this earlier today. There's nothing on the macro level really. I mean, you've got some opinions on some of the supply and demand things like with ethanol demand, crush for ethanol and stuff like that. But on like the big bottom line numbers, you know, I personally don't have anything to say, well, we've been tracking this and we think stocks use needs to go to this, right?
Hmm.
But with that being said, it's reports like this or report days like this where they have the quarterly grains and perspective, all this stuff. These are like little reset periods where they adjust things, um, you know, and so I mean, just expect a surprise. We don't have any insight on what that could be on this one for you, but um, that's the almost. I don't want to say it's the whole point of these reports, but it's appropriate time to make those changes.
Hmm.
And if there's changes to be made, it's going to be Tuesday.
Yeah.
So,
I mean, the question is are we still going to be very heavy on corn acres? Are soybeans buying acres beyond just normal crop rotation? Are wheat acres still trending lower as they've been doing for over a decade? I mean, those are kind of the three biggest questions that I would have leading up to this
well,
report.
the
And
previous yield also. I mean, I think every WASD, everybody's like, okay, are they changing yield or not?
Well, that won't be until the May report, but
Yeah, but I'm just saying, like it just seems like, oh yeah, I guess that, but you know what I mean?
mhm,
Every single, report time that comes out was yield really that type thing, and but
yeah.
yeah.
So, yeah, some things to look forward to. As you mentioned, we are doing our own survey again. We're definitely going to have those results out next week ahead of what the USDA says. Um, yeah, I mean, it's just a good chance to get a nice little basis for where our clients think they're going to be for this upcoming season. And of course, doing that June acreage survey, USDA is going to do one. We're also going to do one. So we want to know a little bit of a shift, or if there's going to be much of a shift from intentions to what was actually planted. Yeah, going to be some interesting ones to look at. Wanting to finish off though with kind of the cattle discussion is, of course, last Friday we got the USDA's monthly cattle on feed report. A little bit on the bearish side, I guess, is what it would be a fair assumption just if you look at what the pre-survey results were versus what the USDA actually came out with. And I don't know, cattle on feed was only 0.2% lower than a year ago for the March 1 inventory. Placements were higher than expected even too, with them gaining 3.7% year over year. And marketing's down 6.8%. So I mean, there's still a decent amount of cattle on feed compared to previous years, and we're trying to pull calves ahead. It seems like what the data is showing and what you've probably heard from producers. But overall, I mean, longer days on feed have ultimately just kept weights up, kept beef production, not as down as it probably could be, just based on cattle slaughter alone.
Yeah, I mean, you definitely wouldn't have noticed. By the way, the market has traded since Friday, that
Hmm.
was a bearish report. Um, I personally expected a bit more pressure coming into Monday, just based off of the previous trend that we kind of broke down through that January to February consolidation period, seemed to be trending lower, and so I thought, okay, well, bearish report, that's just pile on. Um, and actually, hasn't really been able to do that this first, these 3 days of trading. It's actually slowly been grinding higher. But yeah, the feedlot placements and the cattle on feed numbers are staying competitive with last year. Obviously, still below the fiber average, but um, staying in line with last year. So it doesn't seem like our inventory problem, uh, at least at this point in time, isn't getting any worse.
Yeah. Um, and I don't know if it's worth teasing this now, but I mean, I still want to dive into, kind of the shifts that Mexico has had to make over this past year, just with, the fact that we're not importing cattle from them at all, right now has made their industry have to adapt. And so are
Yeah,
they going to produce more cattle and beef
I would assume.
compared to what they usually do? And that's where the USDA is currently headed or in their thinking of what Mexico is expected to do for this year. And, even if we do reopen that border, are the floodgates going to just reopen on, us importing their cattle again? Hard to say if, I mean, they're building that capacity to be feeding those head in their country alone.
Yeah, you know, uh, I guess that's kind of like a macro level
Definitely.
economic thing that um they've been forced to feed cattle and process these cattle, that type of stuff. And I guess so. You're asking, does that stick around?
Hmm.
And I think if I think it's basic economics. If it stays profitable to do it, then yes.
Hmm.
But the amount of corn that they have to import
Yeah.
to feed those cattle, um, and then keeping the plants and stuff to the scale, I think that's going to be a tough ask, maybe longer term, but it's definitely a worry that you said that they've been forced to do it, and as long as they're gonna, I think as long I guess to answer your question, as long as they're making money to it, I think they're gonna keep doing it.
Yeah.
But we have the corn here. We've got, well, used to have the capacity here. Plants are kind of trimming back now, but that's a conversation for a different time. That, you know, it, it's probably better to do here, but you know, let the profitability incentivize what it will, where,
Yeah. Yeah, it's not like they probably want to, overinvest on building new processing capacity um, down there. If it's something that we still have up here in the States and we're already running, under capacity.
right.
So it'd make more sense to send it north. And we've seen that shift just these last couple of years of, beef imports running at a record pace. And that's what this last chart is showing is that we got this U.S. Census data a couple weeks ago of what we imported in January, and I mean it was just an astronomical volume that came in at 654 million pounds,
Yep.
I believe is what that number is, and so I mean that's a record for January and an all-time record for any month, and that's been the trend for January just these past couple of years, and so far it seems like it's going to be continuing here for the short term, and if Mexico is still slaughtering more heads of cattle that they couldn't import to the US, then I mean, I imagine we'd still absorb some of that.
Yeah. For right now, we're picking all the low hanging fruit everywhere, and the,
Paraguay.
the trend's going to continue until it can't. You know,
Yeah.
global traders are going to trade. That's just all there's to it.
Yep. US meat demand is not quite slowed down to the degree that would suggest that we don't need to import as much as we're still importing. So yeah, going to be some interesting trends to watch here moving forward for sure. All right.
That's all I got on the beef side of thing.
All right. Well, I think next week we're probably going to be talking about March prospective plantings and quarterly grains. And if there's still a war going on, we'll probably be talking about that too and a little bit of its impacts that it could continue to have on the grain markets. But appreciate you sticking around and listening. And Nick with his analysis as always. And I'm Dawson Schmidt.
And I'm Nick Lawrence.
This has been Commodity Chat with Trader PhD.